Is that what explains, Santosh, that you made certain changes after you took over both the Balanced Advantage Fund and the Multi-Asset Fund? And they're both doing very well currently. And let's talk about the BAF one first. That typically the industry, on the equity side of BAF keeps bulk of the portfolio in large caps, whereas for reasons that you explained earlier, you have, I think, almost about 40% of your allocation in terms of value, not companies, as you mentioned, it's only four, in a small cap and category. And has that worked for you because the small caps have seen a surge? What happens when, the small caps are overvalued and we start seeing a correction in them further?
So see, I would answer the second part first and the first part after it. Okay, so as I said, I am not buying the small cap index, right?
Yes.
Okay, I am not buying the small cap index. So, and I'm not actually tied up with any company, So the current allocation to small cap is around 30% of the portfolio. In March also, my allocation to small cap was 30% of the portfolio. And actually that portion of the small caps are actually more than doubled. And the allocation is 30%, which means so there were four stocks with 5% weight. Out of that, now two stocks are 1.5% weight. So when I find stocks which get expensive, in my view, I book profits. I generally don't stay with those companies for a very, very long period of time if I find these stocks being expensive. If the stocks are not expensive in my criteria, then I will hold it up to the time I find that they are going in line. So see, I was a research guy for so many years, and I only believe in one thing, that you have to care about input. And input in a stock market is what you think about the EPS and the company. See, stock price is an output, and I would really say that that's luck. In the near term, in a year's time, it's luck. In 5 years' time, your luck and hard work can coincide and come together. In 10 years, they definitely come together. So focus is on input. It's not on output, that what is the stock price, what's going on there. If my companies are showing 40%, 50% EPS growth, and if the stock moves up 50%, how does it matter? But if my stock is going up by 100% and EPS by 15%, I would rather sell all my position and get out of it. Okay. So if you are looking at the portfolio, and I keep analyzing it every month, because I thought maybe that what is the EPS growth which is happening, what is the EPS growth which is expected, because this is in my hand. Stock prices, market will do whatever they want to on the stock prices front. So it's not in my hand, and I don't lose my sleep over that. So that's one first part of the equation. Secondly, see, Balance Advantage, we actually filed, I think, more than 10 or 15 SID changes from last year. And the reason we did that was, it was not that there was anything wrong with the portfolio. The reason some of the changes which we made was more because we wanted more flexibility with our Balance Advantage Fund. Right? Because, see, we change our equity allocation based on our proprietary quant model, which is called MOVI. Right? And our MOVI was filed with the regulator and with no flexibility, if at all, with the fund manager. And I have realized, see, whatever in my life, whenever I've started doing things, in the first instance, it has always gone wrong. Okay. I've always started with some bad timing only. Say I started my career in 2002-03 when the tech bubble burst, and I know how hard it was to find a job. I started my equity career in 2008. I started and financial crisis happened. I took BAF in January of 2022, and I took BAF, and actually Putin decided that this is not the right time for you to get BAF. Right? So thing is that, see, why I'm saying that is movie, when you file it, and if you have no flexibility, then if And it's a very good sort of quant model. But what it prices in is all the data, right, which is based on the past. It doesn't take into account what the events which are happening today or which will have an impact in the future. Right. So the first impact happened in February, wherein we were sitting at very high equity position, and suddenly Putin decided to do whatever he did, and then and everyone changed to a lower equity position within. We were not able to. Right. So we thought that, okay, we need flexibility, although we need to be very transparent on how we do things, and we will keep moving file with the regulators, but we will need transparency. So that was one big SID change we did. Then the other changes we did was around, and then one of the things that was, we changed the name actually from dynamic to balance advantage, more because balance advantage is known, the category is known as now as balance advantage and not as dynamic. But other changes were smaller ones, right? We wanted, because of ILFS, we decided that we will not do anything less than AAA. And we said, okay, fine, we are QGLP house on equity, we will be QGLP on debt. Okay, so that was another thing. We said that, okay, we will do up to AA, but we are not going below that. But just remaining in AAA is not going to give you anything. Okay. So that was the another change. So we are not taking any credit calls at all. But we said up to AA, there has to be some yield also up to AA, right? It's not that you can make all the money out of treasury or AAA only. So on the bond side, we decided that we need to be more active with following the QGLP criteria, doing all our research by ourselves also. On arbitrage also, we changed a little bit, because earlier we were very passive on arbitrage, where we were hedging, which was a stock to stock hedging. We moved to a more active hedging strategy, which helped us over a period of time. Because eventually the category is all about not capturing the downside also. And we captured a lot of downside in February, when we were not able to actually move anywhere. So we captured a good amount of downside then. So we decided that we need to do some fundamental changes, and we did that. So all those changes we did, and so that's around it.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.